Okay, recording has started.
Another one of my favorite video tips. This is my tip on how you can actually utilize Microsoft Outlook to convert your emails into task and calendar.
Hello.
Hi.
Okay, good, good. Ms. Kwame, I'm going to wait a minute or so. Ms. Kwame, can we begin? Out of respect.
Yes, we can. And just as information for everyone, this is being recorded live. So, um, yes, but we can begin.
Well, thank you. Prior to Lady Braddock beginning, we say thank you to each of you who have joined all across the country. Our desire is to make sure that we are educated as much as possible and doing whatever we can to better ourselves as entrepreneurs and business owners. And so our ministry, our nonprofit side, other side, our CDC, I should state, had decided to talk to all the businesses within our ministry, but not only that, to open it up, to just talk about how can we grow. We know that COVID has affected many, but there are many opportunities for people to receive funding as well as to be educated. So when going back into that area, our staff are safe as well as those customers that will be coming to our institution. So it's very important. So today, this is where this stems from. We're glad that we have 4 great sessions that I think will be very beneficial during this hour. So banking and credit, accounting and bookkeeping, legal systems and leadership, essential business tools for growth. So with that, it's going to be very, very important. We understand that this is, of course, a serious time, but we want to be creative. We want to be proactive. We know that people could be suing. So there need to be guidelines for us as businesses, what to do, knowing how to do, and then making sure that individuals know where to go. So proper equipment, sanitizers, signage, all these different things for our businesses in order to be effective. So this is the purpose of why we are here for these next 4 days. We want you to be equipped. We want you to be able to make money, but we want you to be safe in doing so. And so from our ministry, this is where this stems from. So I want to decrease. We have great knowledgeable experts who are going to provide information, resources, and tools for you to be able to go and be able to think about this even outside regardless of where you're at, reaching out to the banks. Our Saginaw Community Foundation is an opportunity for people to be able to reach out. So I want you to have those connections, as well as looking for the foundations in your respected area that will be a great asset for you as well. All right. So without further ado, one of our CRA leaders is with us for our banking industry in the city of Saginaw. Not only that, she's worn so many different hats in regards to helping people, foundations. She's with Isabella Bank currently now. And so just doing a wonderful job in our community, making sure that people are aware of what is there and how we can be more effective. So I want to decrease so Lady Shilda Braddock can go forward. Welcome.
Thank you, Pastor Chris, and to the Saginaw community, and also thank you to this wonderful committee of people that have worked hard to put this workshop on today. On behalf of the Saginaw CRA Bankers Forum, we are very pleased to be a part of this conference today. And we want to be able to ensure that we can bring information to our small business owners that they will be able to use now and in the future. What do? The CRA Bankers Forum, our mission is to identify the credit needs of our communities and actively promote efforts to meet those needs of low and moderate income individuals. The chapter serves the Saginaw County market, and we work with local nonprofit, community-based, faith-based organizations to provide educational opportunities to low to moderate income individuals. Now, by partnering with these entities, we have been able to build strong, ongoing relationships in the Saginaw community. Last year, in 2019, our active participation and financial support helped us to reach over 500 low to moderate income individuals. And our focus was on how to manage credit, budgeting, banking basics, steps to home ownership, economic development, opportunities, and small business education lending. So today we have our team, and our team consists of 9 banks, and that includes Isabella Bank, Mercantile, Chemical Bank, Independent Bank, the State Bank, Fifth Third Bank, Huntington Bank, PNC Bank, and Chase Bank. Today, we have a few members of our team that will be presenting to you today. We have Pat Franklin Lindsay from Mercantile, and we have David Brown from Isabella Bank. We will focus on 4 areas as it pertains to small businesses and credit. What is credit and why is it important? What are the 5 C's of credit? Why you need to open a business account and the importance of having one. And last, what are banking institutions looking for when you apply for credit? Our first presenter will be Pat Franklin Lindsay.
Hi, Pat, we cannot hear. I know you're talking, but we can't hear you.
Okay, is that better?
Yes, thank you.
It works when you take the mute button off. Sorry about that. Today, my name is Patricia Franklin Lindsay. I am the branch manager with Mercantile Bank. Today, I'm going to be talking about why credit is important. Credit is important because it impacts us in so many different ways with getting, being able to get loans, jobs, housing, insurance, and other important services. So we hopefully today you'll be able to understand some of the rights that you have and how you can protect your credit. On our next slide, I'm going to go over how credit is used, okay? So we have a pie that's in front of you that you can see, and there's 5 different areas. One is the payment history. 35% of your credit is made up of how you pay your make your payments on time. So that is something that's so important that most people don't realize. If you make a payment late, it doesn't show on your credit report unless it's 30 days late. So if you can avoid that 30-day late period time, that will not hit your credit report. So that's important to know. The next orange pie, 30%, is how much do you owe on your credit cards or your credit. So if you have a credit card, an example of $1,000, and once you get to $401, which is 40% of that usage, your credit will begin to get pulled and your scores will go down. So it's important to be mindful that your credit lines don't go over 40% unless you plan on paying it off each month. And if you pay it off within the first 28 days, then it does not impact your credit scores at all as well. Then we go to the length of credit history. That looks at how old your credit is. So the oldest piece of credit that you have makes a big difference as to how your credit scores are going to be impacted. So that's why if you close out an account that you just paid off, if it's a credit card, it will impact your credit score. So we ask you to keep those, pay them off and keep them open so that you can have that history there. And then we also look at the credit mix. That's 10% of your pie in the yellow. That looks at how are you using revolving lines of credit. Those are credit cards. They're you don't have the same payment every month. It's based on how you use it. And then you have installment loans, which may be a car loan or a house note. Those are payments that you're going to have regularly. That's going to be the same payment every single month. So we look at that. And then, of course, we look at new credit. So new credit will impact your credit score by 10%. So that would be inquiries. If you had an inquiry done on your account, which means that you were shopping around. Usually this happens if you're looking at car loans. You may go to several different car lots. If you do that in a 30-day period, then you only take one hit rather than taking 30 different hits if you went to 30 different car places. So those are some of the ways that your credit can be impacted. Now, a lot of people are interested in the credit scores, okay? What is my credit score? How do I get that? So what we've included here is 4 different ways in which people get their credit scores. Some people can get it off of their credit card statements, a website. A lot of credit card companies will give you that information free of charge. But be mindful that that score is not always going to be the same score that may be used when you come into a bank to pull your credit. You can go to FICO by doing myfico.com. You can go to Advantage Score, and you also can use the 3 nationwide credit reporting agencies. So now on the next slide, we're going to talk about those 3 credit reporting agencies. You have Experian, Equifax, and TransUnion. Those are the 3 reporting agencies that we use. And during COVID-19, it's important to know that they will allow you now until April 2021 to go and get a free report weekly. So you could view that online on a weekly basis because we have so much fraud that's going on, especially with unemployment. So you would be able to monitor your credit report on a weekly basis looking at that. Next, how do you get your free credit report? Okay, you can go to annualcreditreport.com. Okay, you complete the questions online, and then you would be able to view that instantly. Now, the only downfall with the online, which happened to me, if you answer a question incorrectly, then you're not going to be able to get that report. So then you could fall back on calling the 1-877-322-8228 number, and then you would just go through the prompts and answer the information that way, you'll receive your credit report in the mail within the first 15 days. Okay, so now we go on. Why do we need credit? You know, why do we even use it? It's because financial institutions look at it to score our risk. Landlords are looking at it more and more now to check to make sure that you don't have judgments. And then I've even been told some landlords want you to have at minimum a 620 credit score to be able to move into their property. The number, I'll repeat the phone number for the credit report is 1-877-322-8228. Utilities, we also have utility companies that use it. Some cell phone companies will use it. Insurance companies use it. In Michigan, to do a risk rating, you either will get a discount, or if your scores are low, your insurance premiums will go up higher. And then some employees in other state affiliates will also use that. So now the question that I get all the time, what is a good credit score? Okay, so this is an example that was pulled from the FICO. It goes from 850 all the way down to 300. If your score is lower than 300, that usually means that you probably do not have credit and you don't have a score. So no credit is the same as bad credit. But in order to qualify for most mortgages, your credit scores have to be somewhere between 640 and above. For a car loan, you can get a car loan at buy here, pay here places, and most of them don't care what your credit score is, because most of the time the cars aren't worth what you're paying for them, and they just need to get those sold. So be mindful of where your credit score falls in here. We have an exceptional credit score of 800 to 850. I see more of them now than I have in a long time. But most people, the average American, falls under the good category, which is 670 to 729. So just remember, your credit score does make a difference on what you're able to pay. The lower your credit score is, the more you're going to pay. Okay, so that's money that comes out of your pocket. So be mindful of that, and keep your credit scores. If you like to have more information on how to improve your credit scores, please let us know, and then maybe that's something that we can go into more detail in another class. I like to say thank you, and I'm going to now turn it over to Shilda Braddock, who's going to talk about the 5 C's of credit.
Thank you, Pat. The 5 C's to qualifying for your credit. What I'm going to do is present to you a common evaluation framework focusing on character, capacity, capital, collateral, and conditions. The first is character. What is character? Pretty much we know it's who we are. Your personal and professional history of delivering on commitments is really what we talk about when we mention character. And we're going to be really focusing on the factors that lenders consider. So it's going to be a lot of questions here as we talk about the 5 C's of credit. Factors: do you have a history of paying your financial obligations in full and on time? Do you have a good track record of holding a job or managing a profitable business? Have you ever declared bankruptcy? Again, a lot of questions as to why. But one of the key takeaways is that you really want to be able to demonstrate if you're trustworthy and your commitment to these financial obligations. So again, the key character is really about the credit history. As we focus on what is capacity, it's your personal ability and your business ability to repay those loans, the current loans that you will have and the ones in the future. What factors do lenders consider for capacity? Well, as always, do you have enough personal income, business revenue to pay your bills, the existing debt and new debt? Has your business shown a sufficient history of being profitable? What indicators are there that profits will continue to be sufficient into the future? You know, these are all questions that will be raised and things that a small business should think about. The key to capacity, the takeaway would be to show your ability to repay from current and future income. And so what that means is your debt to income ratio is what you will focus on there. Okay, what is capital? The funds that you have personally invested in your business. And this includes profits that have been personally retained in the business. Pretty much the factors again, how much of your own money have you invested in your business? You know, we talk about, you know, do you have any skin in the game? Do you have family or friends that have invested in your enterprise? Are your assets higher than your liabilities? So again, the key takeaway indicates how committed are you and how much money you would lose if the business fails. What is collateral? We all know that, you know, any personal or business assets that the lender can take in case you cannot pay the debt, you know. Do your assets have do you have any assets such as cars or real estate? Equipment is one that is a really big one that can function as collateral. And then what is the value of those assets? Do you have friends or family members that is willing to guarantee the loan to supplement the collateral? And one thing we want to remember, a guarantee is a legal agreement to pay the loan if the business owner defaults. So the key takeaway to collateral provides the lenders a means to recoup the loan in case your business doesn't perform well. And pretty much it acts as a security for the loan. Next, what are conditions? And that is pretty much the purpose of the loan. The financial prospects in your industry, the economy, and any other external factors that might affect your business. Well, in terms of conditions, one of the great examples would be COVID-19. You know, when we asked ourselves, what opportunities and risks does your company face from changes in your industry or the economy? We know that the unexpected pandemic of COVID-19 really changed the trajectory in terms of how we do business now, which could be a really big risk factor. How would the loan improve your business profitability and efficiency or stability? What are the trends in your industry? These are all questions that lenders would consider, you know, as they focus on the 5 C's. The key to conditions describes how the use of the loan and the environment will assist you in the loan repayment. So again, the purpose of the loan is really the amount that's involved and the interest rates and the principal. So these are the keys to condition and the 5 C's of credit. And now we'll turn it over to Pat.
You're on mute again. Can you unmute it?
There we go. Okay, there we go. So now, why having a business account is so important? You know, basically, a lot of folks have accounts, they have businesses, and they don't track anything. It's money goes in and money goes out. And if you're looking or interested in getting a loan, such as with the PPE, personal protection loan that they just had available for businesses for COVID-19, a lot of businesses didn't qualify because they didn't have anything in order. So having a business account is important because it allows you to be able to track those revenues and expenses, which is going to make it much easier for an accountant to be able to do your books. It's going to help you keep more accurate records. You keep your business records organized and in one place. And also it identify key people in your businesses. Those are going to be your signers. And then it gives you a more professional look when you come into a bank or institution to apply for a loan, because now you have an idea of where your revenue is coming in and going out. And then also be mindful that if you do happen to have bad credit will stay on your credit report for 7 years. And if you filed a bankruptcy, that will stay on your credit report for an addition for 10 years. So it's important to keep yourself, it's important to have a business account so that you can track those expenditures, and it just makes it much easier for your accountant to be able to do your taxes for you. So now we're going to move into what is a good business plan and what banks look for in a loan. And we're going to have David Brown from Isabella Bank to cover that for you.
Thank you, Pat. Thank you, Shilda. Both of you guys did a great job covering a wide range of aspects of banking and credit, things from personal all the way to business. So I'm going to do my best not to overlap too much, but to share some insight from a business lender's perspective that I hope will be beneficial. And one thing I don't think that we mentioned, but to everyone that is on the Zoom call, if you do have some particular questions, please feel free to plug them into the chat. We will have 10 to 15 minutes, I would assume, at the end of our session today to try to address some questions specifically to maybe some topics that you have in mind. So feel free to utilize that. Well, as a business lender, a lot of people are interested in getting loans, starting businesses, or possibly have a business loan at another bank, and they're looking to move. Maybe they're unsatisfied with the relationship. So when they come to a bank, typically we have a quick conversation about what it really takes to put together a loan application. So one of the slides that you'll see there is in regards to what you need to know when applying for a business loan. And in there it says, what is a loan application comprised of? And just real simple, we'll hit on some things that was touched on earlier, but historic financial information, if you have that for a business, if it's been a long-standing business, bankers want to see that information. If you have projections, if you're a startup, bankers want to see what your projections are for the business. And depending on the loan, it could require projections. For instance, if you have a business, you have established historic financial statements, but you're looking to do something different. Maybe it's growing the business or you're taking it in a different avenue. Well, from that respect, projections, they're justified. There's something that's important for the banker to get a good understanding of what you think from a revenue standpoint is going to happen with this growth or with this new direction. What's going to happen on the expense side, and what kind of debt or capital expenditures you need in order to make this happen. And projections are important to paint that type of picture. Personal financial information, personal tax returns, personal financial statements. Those are important because the banker not only looks at the business financial information, but he looks at the personal financial information. A business can be doing well, but we always want to see what the underlying owner's financial picture looks like. And this gives us an idea if he's heavily leveraged, he or she is heavily leveraged, or if they are handling their personal financial situation well. The stronger that person is that supports the underlying business, the better chance is that they can get approved for financing for the business. And we'll touch on that a little bit later as well. A business plan. Bankers usually will see a wide range of business owners and in different various industries, but that doesn't make us an expert in industries or your specific business itself. So we rely on your business plan to educate us. It helps paint a picture of what is happening not only in your specific business, but in your industry. It shows us that you've done your research, who your competitors are, what is your competitive advantage, how do you market your business. It gives us financial information about the industry itself, and financial information about yourself. So it's very important to provide a business plan, specifically if you are a startup, primarily for startup businesses. But if you have that business plan and maybe you're introducing yourself to a bank for the very first time, that business plan also helps paint a picture. And within this loan application, bankers are always going to pull your credit. So we talked a little bit about credit reports, and personal credit is important, even on the business side. Understanding how you handle your financial obligations gives us an idea of what we can expect going forward. If you pay your bills on time, we can likely expect that to happen if we extend a business loan to you. If you're sloppy bookkeeping or you're not paying your bills on time, it's a red flag for a banker. So, we may begin to dig into it and ask some questions. If there's some other delinquency or some derogatory marks on your credit, charge-offs, bankruptcies, collections, those are things that will raise red flags for business owners, for business bankers, and we'll have to have some dialogue in regards to that. So to dig a little deeper, in the next slide, it talks about what a lender reviews when considering a loan application. Now, keep in mind, bank loans are high risk for the most part when it comes to business loans. And the reason being is a high percentage of small businesses, their lifespan is very short. Not very many businesses can last beyond 5 years or so, because it is tough to own and operate a business successfully with the ups and downs of the economic climate. So business lenders will take a long, hard look at applications to determine, because unlike a car loan, unlike some residential mortgages, business loans can have high dollar amounts. And for a bank, taking a loss on a business loan could be a major hit financially for the bank. So we do our best to minimize risk to the point that we try to make sure that our loss is less than 1% in most cases. So a lot of times we're diligently looking through and assessing risk of extending debt to business owners. So when we look at the information, you provide us with your financial records of the business. And what do? We're looking at a history of 2, 3, 4 years of financial records. And what does it tell us? Well, it tells us, the trends tell us how your business has been performing, and it tells us the trajectory of your business. Are your revenues going up? Are they going down? Are your expenses fluctuating, or are they steady? Do you have those under control? Are you able to generate a profit on an annual basis? It helps us gain a picture of how healthy your business is, how much debt is on the balance sheet compared to the assets that you have. It shows us, or it tells us how you've been funding the business. Have you been funding it with debt, or have you been able to use those profits that you generate to continue to fund the business? It's important for a banker to understand that. Your projections. How realistic are your projections? It gives us an idea if you have taken the time to review whether or not this is a realistic business opportunity. It shows us if you're kind of on the right track, or if maybe you need a little bit more honing in about how realistic things can be here. The supportive information that you provide for your projections are just as important. Research. Have you done your homework to show us that, yes, these numbers are solid? They're projections, but they provide a realistic projection of what my business can do, supported by some information that I found. Your personal financial position. We talked about how we pull your credit. We look at your history. We look at, do you have outside income? Are you solely relying on this business to support your financial state personally? Or do you have outside income? What is your debt obligations? Do you have a high debt to income? So if the business does well, you're okay. But when the business may start to have maybe a slide, revenue is down or expenses go up, or there's an unexpected expense that that squeezes your margin. Well, how does that impact you personally? Or do you have personal obligations that you may not be able to meet if the business isn't always doing well? So that's something that we want to make sure that you're handling your personal obligations, not just the business obligations well. So we take a deep look. Not only that, when we're sitting down and having maybe the initial conversations or so, it's important just to be open and honest with your banker, because we're going to see the information at some point. So at the initial conversation, we may ask some questions. Do you know what your credit looks like? Are there some issues going on? It's important just to be honest. That way you're not wasting your time, or you're not wasting the banker's time. And, you know, if there's some alternative solutions we can provide to you, maybe an alternative to maybe traditional banking, we can go down that road. But it leads back to that character piece when we talk about the 5 C's of credit. Being open and honest and upfront at the beginning is an important character piece. One thing that I always tell people is, out of those 5 C's, everything can change except for character. Your capacity can change, collateral value can change, the conditions can change. But character is so important that regardless of how the ups and downs of the economy may affect you, things that you may not expect could happen in your life, life happens. But what we want to know is individuals that we're dealing with, does that character aspect still stay? Because we're depending on you. Well, as a banker, we're investing in your business. So we want to get a good understanding of who you are when we start a relationship, because this is, business banking, getting involved with a small business. We look at this as a long-term marriage. You know, it's something that we take seriously, and we're in it for the long haul, as long as we can expect the same from you as a business owner. Things that we also consider when we're looking at loan applications is your cash flow capacity, kind of going back to one of the 5 C's. But to dig a little bit deeper about how does a banker look at cash flow of a business? Well, what we're looking for is, how does your cash flow compare to your debt load, your debt obligations? On an annual basis, we take your monthly payments and we annualize them. Then we look at how much your cash available is. That means your net income plus your depreciation, interest, all of those non-cash expenses that you can put on an income statement. We add all of that back to figure out what your cash flow is. And when we look at the cash flow and we compare it to what your debt is, I mean, just like when you open up your checkbook and you're trying to figure out what your monthly budget is, you know, you're looking at how much is my income compared to my debt, and how much do I have left over? Well, a banker wants to understand that, but they want more than just a one-to-one. I don't want, for every dollar that you have in cash flow, you have $1 worth of debt. What I want to be able to see is that you have excess cash flow. I want to be able to see that when I look at historic information, that your cash flow has exceeded your debt obligations. And in some cases, bankers like to see coverage ratios of like 1.25, 1.5, 2 times your debt obligations. For every $1 of debt that I have $2 of cash flow at the end of the year, or at the end of a quarter, or at the end of a month, when I'm looking and analyzing your financial statements. Why? Well, the important thing is that you've managed it historically to that point. That's important. But the second thing is, in the future, that excess is considered cushion. So it allows me to understand, okay, if something happens in the future and your cash flow decreases, you have that room to absorb a decrease before you're in trouble with your debt obligations. You have the ability to absorb maybe a economic downturn, and you can still meet the debt obligations that you've signed up for. And that's important for a banker. It gives them a level of comfort when they understand that you can still meet debt obligations if things don't continue to trend in the same direction. Collateral marketability. You come to the bank, typically you have a financial need. Now, well, a financial need could be for a couple of things. You're looking to acquire something. Maybe it's real estate, maybe it's equipment. Those are things that bankers typically will finance for businesses, along with working capital. Real estate loans, we extend loans for about 20 years. So when we're talking commercial real estate, your debt can't go as long as 30-year residential mortgages, but typically it's up to 20 years, 15 to 20 years. The equity that we require, down payments that we ask for business owners when they're buying real estate is between 30 to 20% down is typical, depending on the type of real estate. If it is highly specialized, is how marketable is it, will determine that. The same thing with equipment. Equipment, the useful life of most equipment, 7 to 10 years. Vehicles, usually bankers like to stick around 5 years. So that's the expectation you should have if you go to a bank looking to finance vehicles, pieces of equipment. That time frame is shorter. And how marketable is that equipment? Is it brand new? Is it specialized? All of that affects how a lender will determine loan structure. The same thing with interest rate. For residential mortgages and consumer mortgages, those rates are pretty set and they're highly regulated for consumer protection. However, on the business side of things, your interest rate can typically have a range there. Business lenders have a range that they work within, and it's typically determined about how high risk is this loan to a business. If it's a startup business, it's a little bit more high risk. If it's a specialized need that you have, it may be high risk. But if we're dealing with a piece of real estate that's highly marketable, you can turn around and sell it fairly quickly, well, that might be low risk. If you're leasing it to a strong tenant that provides comfort to a lender, makes it low risk. If you are a strong personal owner and you have a good financial wherewithal behind you to support the business, that also helps create a low risk scenario for the banker to get comfortable with, and it can impact the interest rate that they're willing to extend to you. But keep in mind, no business is created the same. Every business has a different makeup, has a different financial position, is in a different industry and sector, and that all can affect the type of interest rate that a lender is willing to extend to you. A couple of things that I'd like to at least share with business owners, those that are aspiring to be business owners, if you have an existing business, it's never too early to sit down and talk to a business banker. If you're at the infancy stage of your business and you're looking for advice, here's what I would share with you. Interview some business bankers, because those that are willing to sit and share time with you at the infancy stage, they're going to have time for you later on. Business bankers, they're busy, but they're also looking for opportunities that benefit their bank and that are large dollar opportunities, to be honest with you, in most cases. But if you can find a business banker that's willing to sit with you, educate you from a banker's standpoint, share some information with you that'll benefit you, and you guys begin to form a relationship, create that banking relationship early, like Pat talked about. Get a business bank account so that they can begin to see your track record, how you're depositing, what you're putting through your expenses in that bank account. Those are things that will go a long way. So maybe you're not ready for a business loan right now. You could be 12 months away. You could be 24 months away. But starting that relationship early can be vitally important, because it's not just about having a relationship with a bank. It's about having a relationship with a decision maker, someone that can point you in the right direction, tell you what you need to do and what you need to have in place to put you in position so that you will be ready for a loan when it actually comes. And through that interview process, you'll find out who has time for you. You'll find out who has their best interest for you, that wants to see your business succeed, and down the road, you'll be able to call on them when you need them. The second thing that I would say with you is no matter how small your business is, track your progress. Track your progress, your financial progress. You want to be able to start with either an Excel spreadsheet, QuickBooks software, something that allows you to keep track of your growth. Because even though you're small now, you want to be able to show that I've been able to grow my business from here, from A to B to C, so that when you sit down with a business banker, you can show them that you managed a business from a small state to where you have it right now. So monitoring and tracking your income and your expenses the best way you can using a bank statement, using a business bank account, that's a great way to do it. A lot of software allows you to just basically transfer that information from your online banking account into software that allows you to keep track of that. I'm sure we'll get into that later in some of these other webinar sessions, but it's very important to know your numbers. Bankers will ask you questions, and you want to be prepared to know your margins. We want to understand what's your cost of goods. How much does it cost you to buy raw material, to invest in a product or invest in a service? And then what are you selling it for? That needs to be on the tip of your tongue, on the top of your head. You need to be able to know your business inside and out. What are your variable expenses compared to your fixed expenses? If you plan to grow your business, what is it going to cost you? Because keep in mind, growth requires growth pains. So growing a business will require you to make some sacrifices early. Typically, you sacrifice early. You spend money early in order to see the growth later. Do you know what that looks like? Are you ready for it? Are you prepared for it? Because bankers are going to want to know, what are you bringing to the table from an equity standpoint? The other thing is specifically the timing of COVID hitting. A lot of times people don't understand why bankers want to know, do you have reserves? Starting a business is so important to have capital reserves for the just in case, for the unknowns, for the slow starts. Do you have money set aside for the unforeseeable? COVID-19 came, and I think it exposed to a lot of business owners that they don't have that rainy day fund to survive an economic downturn. They don't have that rainy day fund. They don't have the flexibility to have to pivot. Well, if I have to change the way that I sell, can I deliver? Can I sell online? Do I have the ability, the flexibility to cut back on my staff? Those are things that you have to be thinking of, be mindful of as a business owner, so that you can be prepared for the unseen. But saving money when times are good are so vitally important, because you don't know when an economic downturn is coming, but the economy revolves in cycles. So there's going to be ups and there's going to be downs. You just have to be prepared for it. The last thing I'll show you is the very last slide that I have is other resources. Traditional banks like myself, Isabella Bank is a community bank, and we are invested in providing banking services for small businesses in our community. But sometimes traditional banking isn't for everyone. But there's sources out there not only to provide you with coaching and techniques and tools, such as helping you to prepare a business plan, but also there's opportunities for you to get loans through organizations whose missions are to invest in small businesses that are in underserved areas. So the information I have, this doesn't cover all of them. There's a wide range of institutions out there that provide services and loans to small businesses. But these are just a few that I wanted to point out that provide these services. Check them out. They're great services, most of the time free of charge, but they provide such an asset. They're invaluable, and every business owner should at least take a look to see if there's something that they can gain from it. That's all I have. If anyone has any questions, I guess I'll turn it over to our host and we can address those.
I have one quick question that I would love if you can clarify. Difference between business credit and personal credit, and how bankers look at it.
That's a great question. That's a great question. So we all know, we've kind of touched on what personal credit is, and personal credit can be measured through your credit report. You know, it kind of gives us a score, number one, and then it also shows us a history, how you have been paying your personal obligations. But business credit is somewhat of a mystery to a lot of people. Business credit for traditional banks does not carry as much weight for our small businesses, because we rely heavily on looking at the personal credit that a small business has. Why? Because they're so closely tied to that business, right? If that person has financial issues, that business will eventually have financial issues. If I can take a picture of how you handle your personal finances, I can almost for certain be able to tell how you handle your business finances. That just comes from experience. Most bankers understand that. Business credit comes into play for businesses when we talk about vendors, suppliers, other unconventional ways of getting financing. So if you're talking about vendors, you may have a product or a service, and you may rely on a vendor or a supplier to provide you the raw material, right? Or the tools that you need. And a lot of times you're looking for that vendor or supplier to give you 30-day net turnaround to pay them. So you're setting up some sort of agreement with that vendor, and telling them that you're going to pay them within 30 days. Well, that's credit, all right? So that's business credit. So that vendor or that supplier is going to figure out how to analyze, assess risk, and determine how much they're willing to extend to you in credit. Will I extend to you $1,000 in raw material, $10,000 in raw material? They'll do their due diligence to figure that out based on the business itself, their financial records, references from a bank. Going back to why it's important to have a bank relationship. Vendors reach out to bankers all the time to get a credit reference. They wonder, and guess what? They want to understand how you're handling your business checking account, how you're handling your other business loans, if you have any. How long have you had a relationship with the bank? They use that information to determine the business credit that they establish with a bank. With a business. So a lot of times business credit is outside of the realm of the bank. It more falls in line when a business is looking for credit from vendors and suppliers.
Thank you. Well, I haven't seen any other questions. Oh wait, when applying for loans, will the bank look at owner's personal history, or must credit be established in the name of business to obtain financial opportunity? I think you answered that question within the business credit and the personal credit. And then what are some of the greatest challenges that bankers see why people are denied was an earlier question that came through. I know you really want to touch on that real quick, and then I think we can maybe have room for one more question if anybody has it.
So I think the question was, what are some
of the greatest challenges that bankers see why people are denied?
Sure. I think it goes back to the personal aspect. Some people, I think, have a good business plan, right? Or they could have an established business, but when they come to the bank, they're looking for credit. But unfortunately, their personal financial situation isn't in a position where a banker can feel comfortable lending to them because of perhaps they have bad credit. There's things that may have happened in the past or in the more recent future that has impacted their credit. So that's one of the biggest challenges. And I try to share with people, you have to get your personal affairs in order before business banks will look at extending credit commercially or small business loans to you. It's vitally important. I know it's sometimes hard for
Deacon Dave, if you can hear me, it paused a little bit. Mr. Brown, it paused just a little bit. So I'm not sure why, but can any of the bankers maybe step in whilst he's getting back on?
Well, basically, I think if I remember, he was at the point where he was talking about why it's difficult for a small business owner to obtain credit. And the main reason is basically what he was stating. It's personal credit. Mm-hmm. When small businesses are trying to acquire credit, we look at their personal credit first. So that's why it's so important to keep that in perspective. When it comes to medical bills on a credit report, we take a look at the size of them. So if you have a large medical bill and you can explain you didn't have any insurance, have you made any payment arrangements on that we can look at that differently. But if you have a small medical bill out there that may be a doctor bill that didn't get paid, then unfortunately that hits you and impact you in a different way, because the smaller bills we feel that you can take care of. The larger bills, we do expect to see some type of payment arrangement, and then we can overlook the situation if we understand what happened during that time. So when it comes to looking at the difference between personal and business, the difference is when you look at a business credit, we're looking at the credit that was extended to the vendor. That's usually what we're looking at, that payment history. So everything comes back to what I spoke on earlier. When you're making your payments, just don't be 30 days late. Even if you're 28 days late, 29 day late, it doesn't show up anywhere. But once you hit 30 days, it hits your credit report, and then that's where it hurts you. So just be mindful to make those payments on time, so that when we're distinguishing and looking at your personal history, a lot of times we may ask for a guarantee, which means that we want the personal credit person to actually guarantee the loan. So if the business can't pay, then can you pay personally?
Okay. Awesome. Thank you. So I will let Sheila, I don't know if you have any closing comments, and then I think, I know Pastor Chris started us off. I'll have a few announcements, and then I'll let you close out, Pastor Chris. So I will revert to Sheila.
Thank you, Kwame. Again, the CRA Bankers Forum Group, we really appreciate this opportunity that you've given us to collaborate with you as pertains to your small business workshop today. We would like to say that, again, we as a Bankers Forum, we provide education and financial resources to faith-based non-profit organizations. And if anyone is interested in, being able to apply for grants that we will focus on as pertains to education opportunities, you can contact us. There's two of our bankers here, myself and Pat Lindsay. So the numbers are here, and if you are interested in wanting to apply for some financial resources that will focus on education for businesses, nonprofits, please call us at the number above. Again, we thank you for the opportunity to collaborate today.
Okay. All right. Thank you. I'll just give two announcements real quick, Pastor Chris, and then you can close us out. So thank you guys for joining. So number one, it's really important to register. Tonight, we'll be sending out a few other materials for tomorrow's session, and then also we'll be sending out, I'll have to ask permission, but I think we'll be able to send out a PowerPoint today as well, right? We have that as a PDF. Yeah, so we'll send that out to you so you can use it as reference. And then tomorrow at same time, 12 to 1, I know you saw the message for the giveaway from Pastor Chris. Please let everybody know there's still room to register all the way till Wednesday. And it's important to register because that's how we're able to send you all the materials. If anybody registers after tonight, I will be able to send them the PowerPoint and everything they missed. This video will go on Facebook. I'm trying to do it live on Facebook. I couldn't, but it will be posted on Facebook by the end of the day today. So with that, I leave it to Pastor Chris to go ahead and close us out.
Thank you to each of you who presented on today. It was very helpful all across the board, so very appreciative of that. I also asked you to put a number down. We just given small gifts throughout the time. In lieu, and I've been talking about being safe, making sure as we return back to our businesses, not only our clientele, but you are safe. That is vitally, vitally important during this COVID time as a business owner, as well as getting the information out to your customers of what you're doing to keep them safe. We're going to stay in business. We need to be proactive in regards to reaching out to them so that they are notified. These are the parameters that we have taken as a business to assure when you return to our business that you are well. So if you put a number in 1 through 100, then I want to just give you a small prize today from the Victorious Believers Ministry CDC board. Each day we'll be doing so. But also during this, Mr. Kwame stated also there is a free book that is going to be downloaded to you. It is a reference book. Don't be intimidated by the size. I think whenever needed, use the tools that are available. So there are different parts about loans, business plan. There's a part about marketing. All this information is for you. So this book will be sent to you through PDF that you can begin to look, have at your disbursement at any time to be able to utilize. So we want to make sure not only are you getting this great information, but utilize the tools, really make sure that you go back and hear the information. All right. So numbers 1 through 100, I before we started, you know, I'm a pastor, so I'm going to be truthful and honest. This is just a small little gift just to say, stay safe in this time. All right. I don't care what the rest of the world is saying or maybe our leaders are saying. I believe that we should be very safe in this time. Okay. So don't take it lightly. Okay. I don't know what the numbers, I do see numbers coming up and I'm trying to go to the chat. The number that is selected is the number 68. Why that number? I don't know. But those and whoever that was who selected close to that will be our first recipient. Each day we'll do it. So you can be over and under. Who is that?
Marcia, 64. She has 64.
64. Okay, small token to give. I see 80, 50. Let me just make sure 64, 99, 99 and a half on due, Kim. But with that being the case, 21, 11, 26, that's one of our old church songs. Today, out of safety, and we'll be giving prizes throughout each one. I want you to be safe, and I don't want to take this lightly, but we're just giving away 50 masks for your businesses, customers. Each day we'll be doing something so that you can support your business in regards to moving forward. But why I said that is because people are minimizing during this time to wear masks. It is vitally important for us, out of respect to others as well as yourself, to make sure that we are safe. So I want to leave that with you today. We'll get that to Marcia. We'll either mail it. Is Marcia in the area?
Yes.
I believe so. If not, those who are on will be mailing those out. You're in for a treat. You have phenomenal speakers on tomorrow. Mr. Nana Kwame Akua will be presenting in regards to finances. And then none other than Lady Barb Littles will be sharing with us as well, and then coming back. So we'll be giving you more tools to be helpful. I want to say thank you to our presenters on today. Phenomenal. I gained some vitally important information for myself. So thank you, Lady Shilda, Mr. Brown, and Lady Patricia did a remarkable job on today. All right, our time is up. We want to respect your time. Have a good one.
Thank you all.
Thank you.